Welcome everybody to this special TrustMark webinar entitled Top Tips for Managing Your Finances. I'm Daniel Harrison from TrustMark. During a recent survey with our TrustMark Registered Businesses, you told us very clearly that you really needed some support in terms of managing your finances, particularly around training and understanding some of the jargon, the technicalities, the issues that small businesses and sole traders face. So for the past year, we've been working in partnership with Martin Mellor from Mellor Financial Training to provide quality but affordable training resources. And they've been taken up by a number of our members over the past year. But we thought it'd be useful today to actually put on a webinar where we can talk to you more specifically about some of the key issues that small businesses and tradespeople and sole traders in particular face when it comes to managing their finances, and then give you the opportunity to ask Martin some questions about some of the key areas that you have concerns about. So I'd like to introduce Martin. And first of all, Martin, thanks very much for joining us today. And can you just tell us a little bit about yourself and your background?
Yeah, hi Daniel. Hi everyone. Thanks for that. As you say, my name's Martin, and I, for my sins, a chartered accountant, a chartered management accountant. I have been for about 25 years, and that career has involved me working with businesses of all sorts of sizes and sectors. So I've worked with everyone from really big companies like British Aerospace and IBM and Lloyds Bank. But I also, for the last kind of 9 years or so, have worked with smaller businesses, including people like heating engineers, metal fabricators, other tradespeople, lots of smaller businesses. And kind of what I do is help all those people to make a bit more sense of the myriad of language that there is involved in finance, help them understand financial terms and jargon, but also understand how those finances can help them to run their business. So it's a really difficult thing to do, to run a business, and you don't know what you don't know. So what I do is to help and support businesses to make better decisions, basically from a financial perspective.
First of all, I think one of the key things we know is that many people, particularly when you're running a smaller business or you're a sole trader, is you can feel overwhelmed, and a lot of it's around time management, and there are deadlines and things. And is there any kind of advice you can give them what they can do to just help cope with that, really?
Yeah, and it is a massive challenge, isn't it? So for lots and lots of people, and not just tradespeople, finance is really like a long way away from the thing that you actually want to spend your time doing. The sad thing for all of us, or for most of us, is it's a necessary evil. So I suppose the first piece of advice I'd give is to not bury your head in the sand. Nothing gets better by just putting it off and putting it off and putting it off. So I would really advocate finance is a job that if you can stay on top of it, it shouldn't be that time consuming. When it becomes more time consuming is when it's the 30th of January and you've still got to file your tax return and you're trying to find all that information at the last minute. So try and stay on top of things, and a big help with that is to seek help, seek guidance, seek input. So don't feel like you have to do it all yourself. I think we'll talk shortly about some of the ways in which you can do that. But if possible, in many ways, I would advocate that it isn't you that's trying to do that bookkeeping or that record keeping or that invoicing or anything to do with your finances. It might be a member of your family. It might be actually paying someone to do it. It's money well spent, because the way that you make money in your business is by providing the services to your customers that you provide. It's not by doing the admin. So the more that you can free up your time to actually do the work, to go and quote for the work, to win the work, to deliver the work, the more money that you're bringing in. And so it's a bit of a false economy to think to yourself, well, it's cheaper if I do it myself, because actually you've got to find the time. And as we all know, I had some tradespeople at my house last night until 9 p.m. Well, the last thing you want to do at 9 p.m. is go home and start doing a load of record keeping. And that's when it can become really easy to just think, oh, I'll just do it at the weekend. Well, do you really want to eat it into your family time to do all this stuff? So two key things really: don't bury your head in the sand, and seek help, seek guidance from other people.
That's great, Martin. Thank you. And are there any kind of like, what were the top tips in terms of where help could be available to them?
Yeah,
Where could they find this help?
yeah. So I'm going to focus this answer on two things, and they're kind of connected. So what you'll find is that a good accountant, someone to help you to prepare your tax returns, prepare your accounts, so it depends on the business structure as to quite what you have to do and when you have to do it. But a good accountant is worth their weight in gold. So they will help stay on top of things for you. They'll help point you in the right direction. They'll help you to implement the right processes so that you minimize the amount of time that you're going to spend. There's a subtle difference between an accountant and a bookkeeper. Okay. But the actual sort of nuts and bolts, if you like, the actual grunt work of preparing all this stuff is a bookkeeper. So many accounting firms that support small businesses will have a bookkeeping function. You can equally go and employ a bookkeeper on a part-time basis, depending on how big you are, on a full-time basis. And there are lots of them. And then, as I said earlier, there's also the possibility potentially that a member of your family might be able to help with that bookkeeping or that record keeping, possibly. The second thing, and something that's changed exponentially in the last few years, is technology, and the way in which we can use technology to help us to do that. So again, if you've got an accountant, if you've already got an accountant, it may well be that they are advocates of or regular users of certain technology. So some of you may have heard of things like Xero or QuickBooks or Free Agent. And these are online web-based accounting systems, and they kind of speed up an awful lot of the processing and the record keeping. But the bit that's really important in terms of technology and things that you can look to potentially investigate, added on to these systems are extra apps that can make your life an awful lot easier. So I'm going to talk about two. But there are thousands of these things. Okay. So the first is one called Dext. Now, Dext used to be called Receipt Bank, and Receipt Bank is a bit more of a what does it do on the tin type name. Basically, what it means is, and I'm hopefully going to, you can open an app on your phone and you can take a picture of any invoice or any receipt for anything that you buy in relation to your business, and it will automatically push that bill or that invoice or that receipt into your accounting software. It'll not only do that, but it will learn over time that when you go to Screwfix or when you go to Wolseley or wherever it is that you go buy your trade things, it should go into a certain part of your accounting system. Whereas if it's, buying petrol or buying diesel or that kind of thing, it should go into your motor expenses. So it will automatically get things into the right place within your accounting function. It's really good as well if you've got suppliers, say you've got a trade account at somewhere like Howden's or something like that. It's really good when you get the email with a PDF with a bill or a statement on, you can just forward it from your email into this system. And again, it'll suck out all of that information and it'll send it into the right place in your accounting system. So it's a massive time saver. It's going to cost you about £20 a month to have that technology, and it'll save you hours and hours. It'll also save you having to have that kind of shoebox full of receipts that you dump on the table at the accountants at the end of the year. Another example of that kind of tech, you can get what I'd call kind of job or sector specific apps that help you. But for tradespeople in general, there's one called Tradify, and it just helps you run all elements of your business in terms of invoicing clients, issuing quotes, getting customers signed up, getting their details, getting their bank details, help you to manage jobs if you've got subcontractors. Again, there's all sorts of things. So there's loads of these things. I would try and find an accountant or a bookkeeper who is used to working with businesses that do what you do, whether that's plumbing, whether that's heating, whether that's building, whatever it is. Find an accountant that does what you do and take their recommendations on the technology that you should be using and ask them to help you to get it set up. Ask them to demonstrate to you how you should be using it and when you should use it. And I think you'll find it will reduce the number of things that you have to do. It'll reduce the reliance on your memory. So, because you're doing it there and then. And it'll help automate a lot of those processes, and therefore it kind of takes that burden away from you.
Yeah, that's really good ideas there for people, and hopefully you've captured some of that. We are putting the links in the chat for a lot of the apps and the information that Martin talks about in this webinar. So keep your eyes on that as well. And as I said, this will all be available after the event as well. So you'll be able to, if you're not making notes, join the meeting. That's fine. We're aware that often with finances there are key deadlines, particularly submitting your end of year, etc. But would you like to just talk a little bit, Martin, about what the key financial dates are through the year?
Yeah, sure. So some dates that are common to everybody, no matter what your business structure is the what I'd call the personal tax year. So this is the one that starts on the 6th of April and it finishes on the following 5th of April. And every time, there's a budget or the Chancellor stands up and says, we're making changes to national insurance, or we're doing this, or we're changing the thresholds, or we're changing the rates, they kick in from the beginning of one of those tax years. So every year we all have a tax allowance, which is the money that we're allowed to kind of earn before we start paying any tax. And we have any various other things. So that's the tax year. But we then have a requirement to file a tax return that's on the assumption that you're not being paid through a payroll where the tax is collected through your monthly pay. We all have to file a tax return, and we have to do that by the 31st of January after the 5th of April. Okay, so we basically have about 9 months in which to prepare and submit that tax return. Okay, so 31st of January. If you go beyond that, and lots of people do, if you go beyond that, you start to get fined and you start to incur interest charges. Okay. Now, the crucial thing to remember is it's not just the filing of the tax return. You have to also have paid your tax bill by that point in time. Okay. There's a second sort of relation, brother, cousin, whatever, of the 31st of January, and it's the 31st of July. So HMRC, the taxman, operates a system called payment on account. And what that means is when you submit a tax return, HMRC then guesstimate how much your tax bill will be for the following year. So rather than run the risk of waiting another year for you to pay any tax, they ask for you to make a second payment on the 31st of July. And so we're making 2 payments each year, or we should be. And in effect, what you're doing on the 31st of July is you're forward paying for your return that is due by the 31st of July. You can make requests to adjust them. You can make requests to reduce them. You can say that your circumstances have changed, but fundamentally, that's the system that operates 31st of January, 31st of July. Over and above that, if we have a company, so if we've set up a limited company or a partnership, we also have to file company accounts and a corporation tax return. Those dates are specific to each business. So basically they're triggered by the date in which you set up your business. So let's just say, what date is it today? Something like the 13th, isn't it, of March? If we set up a business today, by default, the end of our financial year would become the 31st of March going forwards. And that would be the end of the company's financial year. And it then has 9 months after that in which it has to file its accounts to Companies House and it has to pay its corporation tax bill. So there's a really bizarre system where you have 12 months in which you can file the tax return, but 9 months in which you're meant to pay it. Like, it doesn't make any sense, but that's the system. So they're the kind of key dates. So if you've got a company, you'll have dates related to your company, and you'll have your individual ones. If you're what's called a sole trader, so you've not got a limited company, you just operate as yourself, then you're governed by the personal tax year, and the requirement is that you file what's called a self-assessment tax return. Now, directors of companies, so if you own your own business, that's a company, are also required to provide a personal tax return as well, which is why I'm saying that's kind of common across both structures. Okay.
Excellent. Yeah, some really good dates to make note of there. And again, that you'll be able to review this video afterwards if you didn't manage to catch all of those. Going back to your comments, Martin, earlier about working with accountants and bookkeepers, sometimes the thing that's most off-putting for people and why they just put stuff in the shoebox or push it to the back of their mind is that just the difficulty understanding some of the jargon that's around this world of financial and bookkeeping and that kind of thing. Have you got any kind of tips for how that people can overcome this? And it is sometimes just a bit of apprehension, but how can they overcome this and bridge this communication gap that they might have with their accountant or their bookkeeper?
Yeah, absolutely. So I suppose there's a few elements to this. So firstly, if you don't understand something, ask. We'll come on to the training that we provide, because a big part of that is tackling the language. Obviously, there's the internet as well. You can go and search these things, search the terms, try and understand it a bit more. But if you are paying an accountant for their services, they should be more than happy to explain to you in layman's terms what it is that they're talking about. Now, what I will say is, even though I am one, on behalf of my profession, there are some absolutely brilliant accountants out there that do that. There are some absolutely brilliant accountants out there that would regularly talk to their clients. Equally, at the other end of the spectrum, there are accountants that are sort of the stereotypical accountant that like to lock themselves away in a darkened room, and they don't pop out very frequently, and they're not very good at proactively having a conversation. So firstly, don't be shy of changing accountant if you don't think that you're getting the service that you should be from them. Don't be shy of asking them what it is that they mean, and the impact that has, because we do use lots of language, lots of jargon and terminology. And if you still don't feel like you're getting an answer that you're happy with, you're paying them for a service. So that's a point to say, is this the right accountant for me? And then, as I say, over and above that, things like our training hub provide lots of points of guidance on language and jargon and terminology and what it means. And I think the other thing that I would just say is go easy on yourself. You didn't set up your business to be an accountant. An awful lot of what we talk about and the language of it means something to accountants, and it doesn't mean much to anyone else. So I often encounter people who almost think there's a presumed level of knowledge that they should have because they run their own business. Nothing of the sort. If you don't, there's no reason why you should know something that you don't know. So, as I say, seek help, talk to your peers, talk to other people, other tradespeople, other TrustMark members, ask questions, use social media platforms, forums, ask the question, think about some training. That can help you. There's, like, for example, we have a sort of A to Z guide of all sorts of different language that can be used by accountants. But if nothing else, don't be shy of asking the people that pull the stuff together to you, what does it mean? In layman's terms, talk to me in terms that I'll understand. And if they're not able to do that, then that kind of tells you something about the service that they're providing.
Really good advice there, Martin. Thank you. And so, following on from that, you're sat there. You've got your shoebox or your spike full of invoices, disorganized paperwork. You're really worried about where your business is from a financial point of view. Can you just provide like 3 simple actions that someone could take today or tomorrow that would improve their situation?
Yeah. So the first thing that I'm going to say is, the thing that I observe the most that trips people up is they get to the point of needing to pay a tax bill, and that might be a personal one, it might be a corporation one, or it might be a VAT bill, and they're scrabbling around to find the money to do it. And of course, paying tax is the thing that's gonna trip you up pretty quickly. So something that I advocate with my clients is to set money aside to pay those bills as you're going along. So if you're a business that's big enough to be VAT registered, and the Chancellor last week increased the threshold going forwards, but not by very much. If you're big enough to be VAT registered, you know, if you set aside 15%, somewhere around there, of any money that you receive from a customer and put it in a separate bank account, that should be more than enough to cover your VAT bill when it comes round. If you just leave it in your bank account and you use it and you're spending it, there's a chance that when it gets to the end of the quarter and the VAT bill is due, that you don't have that money. You've already spent it on something else. Okay, so I would put some money aside for that. I would also put some money aside if you're a business, if you're a company, for corporation tax. And as an individual, I'd put some money aside for your tax bill. Because as I say, you've got these 2 points in the year at which you're going to have to make those payments. And if you have to extract that money from your business at that point in time to pay your own tax bill, it's going to be extremely penal in terms of the amount of tax you have to pay to access that money. So I'd set it aside as you're going along. The second thing that I'd say in terms of managing your business is around getting paid. So the biggest cause of businesses closing by an absolute million miles is that they run out of cash. So you can be a profitable business but not have enough cash in the bank to pay the people that you owe money to. And there's lots of studies on this. There's billions and billions of pounds of overdue payments in the economy at any given time. And there was a study done relatively recently that tradespeople on average are owed about £7,000 by their customers. Not just owed £7,000 by your customers, but that's late, right? So it's gone past the point at which that customer should have paid you. Having a plan, having a strategy, having a way that you collect that money from your customers can really keep you one step ahead of that challenge. It doesn't mean there aren't other challenges. It doesn't mean that you aren't going to have the odd problem. But basically, the money's better off in your account than it is in someone else's. So whether that's taking deposit payments up front, whether that's getting payments on account as you're going along, whether that's let's just say for point of argument, you were using someone to do your bookkeeping, can they be chasing payment for you as well? Lots of the technology that I mentioned will automatically remind people that they owe you that money. And it's not that in itself is going to have a massive impact, but it's all part of a picture that you want your bill to be paid ahead of someone else's. So doing that and also understand what is the process in your customer. If it's individuals in a house, it's probably something slightly different. But if you work with other businesses, find out what's required for them to pay your money to you. So is it that a quantity surveyor needs to sign off the work that you've done, for example? Well, there's no point going and chasing the payment if the quantity surveyor hasn't signed off the work, that kind of idea. So try and understand what that process is. And then the third thing is back to the point about technology. So I would try and find some technology, some simple technology that works for you, that helps manage the admin burden, because your time is far better served delivering work for customers than it is doing admin. So they'd be the three. It'd be about setting money aside for tax bills. It'd be about trying to tackle the cash challenge. And the third thing would be trying to get some technology to help you.
Fantastic. Really good advice. Thank you for that. Just to remind those people who are watching this webinar, you are able to ask questions throughout the meeting if you want. And if there's anything that Martin's mentioned that you just need a bit of clarification, as he said before, just ask. If you're not sure about anything that you've heard, then please feel free to add a question at any point, and we'll attempt to get to it. And we have had some coming in. One is so what advice would you have for people just starting out, so they've got a clean slate, What should they be doing from day one to set off on that sort of successful journey?
Yeah, it's a really good question, that one. So I think what I guess many of the members and people that are joining the webinar today will understand the difference between something that's planned out with a sort of clean sheet of paper versus trying to retrofit something onto something that's already there. So if you are starting, you've got the opportunity to kind of set out with a clear intent on what you're going to do and how it's going to work. And you might think, oh, well, I'm just starting out today, so I'm not going to need an accountant for another year, so I won't engage an accountant for another year. I would speak to someone, get someone on board to help you to set up your processes and your systems and your technology, get you doing the right things from day one, rather than try and play catch up. And there's an old phrase, isn't there? If you buy cheap, you'll buy twice. So don't make that decision based on cost. Make the decision, if you can, based on the recommendation of other people that you know and trust. So it's highly unlikely that you're going to start a business without knowing other people in your trade or profession or similar trades and professions. And I would talk to them and get their advice and their guidance on who they work with and what makes them good. And I would go and have an initial conversation so that you can start on the front foot, start doing things from day one, start making sure that you're gathering all the right information, that you've got the right record keeping. And not only that, funnily enough, I answered a question on a different forum yesterday. If you start a company, you can actually go back in time and look for any expenses that you incurred that would relate to that business as it is going forward, and you can offset them as if they'd happened on the first day of you running that business. So getting that kind of help and advice up front, don't leave sort of money on the table, if you like, through a fear of or thinking that you don't need the advice and the guidance up front.
Excellent, thank you. We've had another question come in, and it's actually referring back to, you mentioned some of the technology and apps that are available to people, and the question is, if you use Dext, do you need to keep the original receipts and paperwork?
No, it'll store them digitally. So basically, once you take the photograph and push it into Dext, that's it, gone. Now, obviously, if you've got paper copies, you're meant to keep them for 7 years. So it's a potentially a big space saver. Think of all those receipts and expenses, and also the potential that you would miss one. You've gone out and you've bought something, you've spent some money. If you can zap it at the time on your phone, you don't have to remember. You don't have to keep the piece of paper. Move on. Yeah.
Thank you. Hopefully that's answered your question. Yeah, and another one that's come in is this person's considering starting a company, so they haven't actually got a company at the moment. And could you just briefly explain what they need to do before the company actually exists? What the process is?
Yeah. So I mentioned briefly there's different structures of businesses, okay, and I think the question is about starting a company, what we'd call a limited company, and that's a choice that you've got. Do I do it or do I not do it? And there's nothing that says that you have to do it on day one, is the first thing. So you can start trading. You can be Martin Mellor, plumber, and start trading and have no company, and then I can change and become a company in time. However, so if you've made that decision, some of the reasons why you would do it is the reason it gets its name, limited company, is what it means is the liability, what's called the liability of the owners of that business is limited. So what that means is if that business has some difficulties, your personal assets, your house, your car, your whatever, are not at risk from people coming after the business for money. If you're what's called a sole trader, you and the business are classed as one and the same thing legally. So potentially your assets are at risk if something disastrous was to happen. So that's one of the reasons why people would choose to do it. There's a relatively simple, I say relatively simple, there are what are called online formation agents. Any decent accountant would do this for you. Basically what you need to do is register with Companies House. There's a small registration fee involved, and then once a year you have to do what's called a confirmation statement. You have to say we're still going, we're still trading. That takes some relatively simple details from you. So who are you? And it'll ask things like, what is the share capital of the business? So basically, for a company to exist, it has to have at least one shareholder, and it has to have that shareholder have invested basically £1. It doesn't need to be anything more than that. Okay. Now you might have more shareholders if there's more people that own the company, or you want to start it with your partner or your spouse or whatever. You might have 2 shareholders, you might have 10 shareholders. It's entirely up to you. But that registration process would determine that ownership structure and what is the initial investment from you as owners. Okay. An accountant would also talk to you about how you might fund that business. So there's a thing called a director's loan, where basically you can lend money to the company and then take it back again. And it doesn't incur tax when you take it back out of the company if you've lent it in the first place. So there's a few quirks like that, but the actual process of registering a company is pretty simple. And then what you'd get is a company number. Equally, what's then required is a year later, you'll get a reminder, we need to file a set of accounts and we need to file a corporation tax return. But once you've got that number, you can start trading using that company name. You'll also need something called a registered address. Okay, so this is basically where all the company paperwork would go to. I would guard against using your home address as that registered address. So lots of accountants will let you use their office as the registered address. There are business addresses where you can basically rent an address to use. It just keeps more distinction between you as people and your business. It's not disastrous. It's not the end of the world if you want to use your home address. But if you've got an accountant, I would inquire whether you can use their address as your registered address. But yeah, I would reach out. It's one of those things. It's kind of, it can seem a bit out-facing if you don't have someone holding your hand through the process. If you have someone that knows what they're doing, it only takes a few minutes to register a company.
Thank you. Hopefully that's given the person who asked the question, the confidence to proceed with this. Yeah, really good advice there.
Yeah, do that.
Okay. Right. So we've got another question here, Martin. Could you recommend any tools that integrate with Xero and Dext to enhance cash flow management, particularly for forecasting future expenses?
Yeah, so there's a couple of things that I'd recommend, and there's probably 2 elements to this. So to help kind of forward project cash flow, and to use all of the data that there is in Xero, or any of the cloud packages, there's 2 cash flow management tools. One is called Float and one is called Fluidly. They're both plugins to Xero in the same way that Dext is. It's just, imagine Dext as an input and these things as an output. And what they will do is they will take all the known data from your Xero system. They'll allow you to input forecasts and budgets that might be from a spreadsheet. It might be already loaded in Xero. And they use some pretty whizzy technology to forward predict what your cash balance is going to be. From a cost perspective, you're probably looking at around £30 a month to use that kind of technology. But with both of them, I'm not 100%, but I would think that you can get a free trial, so you could try them out and see if they work and do what you want them to do. Another element to cash management that I'll just highlight in terms of tech that you can use is actually chasing payment. So I mentioned that Xero and QuickBooks and things, you can send reminders. Well, there's a couple of other plugins that do that in an even smarter way. So one is called Chaser and the other is called Debtor Daddy, and they would both send things to your customers to remind them to pay you. But in terms of kind of a broader view of cash and your cash position, Fluidly and Float would be the 2 apps that I would recommend.
Thank you. And we have another question. The question is, I'm a sole trader with a turnover of about 150k. I have one subcontractor and only use a handful of suppliers. My self-assessment tax return is £2,000, and this includes bookkeeping. On top of this, I pay for VAT returns and monthly returns. Is this too expensive?
Is it too expensive? I would. It it feels reasonably expensive. As in, I think you could probably find something a little bit cheaper, but I would sort of almost turn the question round and ask if there's any other value being added by the accountant. You know, are they meeting with you? Are they giving you a view of how your numbers are going to look? Do you know in advance what your bill is likely to be? Are they telling you how you're performing? That feel when you add on top for the VAT returns and the monthly returns as well, that does feel reasonably punchy. But it's hard to say. So I definitely think you could probably get cheaper, but as I said in earlier, buy cheap, buy twice as well. So I'd be slightly wary of going too cheap, but that does feel relatively expensive to me.
Thanks, Martin. Another question that's come in from one of the viewers is, this is a good one actually. Could 3 different accountants come up with 3 different amounts of tax due from the same books? That's one part of the question. And part 2 of the question is, how do you have a conversation about paying as little as possible, but obviously doing nothing illegal?
Yeah. Yeah, this is something that comes up reasonably frequently. I'm sure you might kind of guess. So to answer the first question, the short answer is yes. Different accountants might make a judgment call in a different place. So one of the things that we tackle in the training course actually is, you might think that accounts are like this, like black and white, lots of rules, and there are lots of rules in it, and there is lots of guidance and structure, but there's also some choices that businesses make that would make a slight difference to how we show things and what we show and what we include and what we don't include. So different accountants have slightly different application of some of those rules and how they would do it, and how they would guide you. But one thing that I would just sort of add into that as a slight caveat is, if it's your business, it's you that signs off those accounts saying that that's the company performance. So you need to be comfortable. And therefore, the point is, talk to your accountant, ask them to explain why they've included certain things and why they haven't included certain things, and how they've timed things and the way they've treated things. So there's some quirks of the system, particularly in relation to the treatment of the things that I'd call kind of the infrastructure. So say you go and get a new vehicle, or you've got a load of new equipment or new computer, anything like that, that stuff might be treated slightly differently by accountant A versus accountant B versus accountant C. And so again, I would ask them to explain how they've come to the output that they've come to. In terms of the tax thing, it's an interesting one, this. So it's a fairly common question. I would say, I would pose the question, is there anything else that you see from any of your other clients that we might have missed in terms of submitting our records that would help offset our tax bill? But again, I'm going to use the caveat, if you're paying the tax, the more tax you pay, the more money you've made. So people often look to minimize the tax bill, but you're only going to pay that if you've made the money. Okay. So you can have a constructive conversation, and I've seen some fairly extreme examples of things people have tried to do in the past. I had one recently where someone asked me if it would be okay if they bought a couple of mountain bikes for the business, because they could use this for client entertaining. These mountain bikes were going to cost £8,000 each. Would that be okay? Kind of went, well, probably not. But that said, as I say, you don't want to pay more tax than you should be. Now, a good accountant should stop you from paying more tax than you should be, but that's about making sure you've given them as many records as possible. You've given them all the receipts, all the things that you've spent money on, and you will learn from working with them over time what's allowable and what's not allowable, and the things that they think are okay and are not okay. Um, One of the things, for example, that we're allowed to offset is you are allowed, if you work from home, let's say you're out and about with businesses, but you do the admin at home, you can charge your business an amount of money for the fact that you've used your home as a place of work. And there are 2 or 3 different ways in which you can calculate how much money you should be able to take back from your business. And different accountants will guide you in a different way on those things. But yeah, basically, like it's a weird thing, isn't it? But if you're paying tax, you should be making money. So it should be a good thing in a perverse way.
Sound advice there. So I think that's kind of drawn the questions to a close now. Thank you very much for those that have participated in that and submitted the questions. That's really good. So quickly, I just wanted to sort of finish off. Martin's already referred to the training, the on-demand training course that he provides. It's a comprehensive program. It equips you with all the knowledge and the skills to confidently manage your finances. And I was just going to invite you, Martin, just to talk a little bit more about that before we close.
Yeah, thanks, Daniel. So yes, so the course itself is what's called self-study. So it's one that if you were to sign up, you would get a pretty chunky discount. So we offer it to TrustMark members with a 75% discount on what the retail cost is to anybody else in other businesses. In return, what you would get is a login to an online course that you would access through your computer or your tablet or your phone. Basically, anywhere that you've got internet access, you can access this stuff. What you're buying is a license into that hub, into that system that lasts for 12 months. So you can go through it as many times as you like. You can go through it from start to finish in one fell swoop. It'll take you probably 3 or 4 hours. Or you can do it in bite-sized chunks. You can pick bits that are relevant to you. You can work your way forwards and backwards. It's a really interactive way of learning. So it's been designed specifically with some online learning experts. So it's not just kind of, hopefully it's not just really tedious, really dull, just going through lots of text. It's interactive quizzes, exercises, games. We use characters, so to draw an commonality to what you do in your day job. And it goes through all manner of things in relation to understanding finance and accounts, so that you can understand, what are the benefits or what are the pros and cons of setting up a business in a particular way? What are the things that we have to do? What's the information that we have to provide? What will our accounts tell us? How might it help us run our business? Because that's the other big thing with accounts is lots of people treat them as a right, I've had my accounts prepared, they're going to sit in a drawer, I'm not going to look at them again. But actually, there's loads of gold dust in there that can help you to run your business. It might mean that you change your prices. It might mean that you manage a certain type of cost in your business differently. It might mean that you look at what you're paying subcontractors. It might mean that you pay different people different wages. It might tell you something about the value that you're creating for yourself. There's loads of stuff in there. And so what we do is we kind of hold your hand through all that process. We navigate all that language, all that jargon, and we help you. Fundamentally, the aim is that you'd be able to have a much better conversation with your accountant or your bookkeeper to help you understand all those things financially. And the beauty of the license lasting for a year is, with the best will in the world, you're never going to remember it all, but it gives you a point of reference that you can go back to again and again if you need to. So that's the way it works.
Excellent. And as you mentioned, we're offering this at a really heavily discounted rate to TrustMark Registered Businesses. So would you like to explain the cost?
Yeah, absolutely. So the full retail price that anyone off the street could buy it for is £199 plus VAT. So we're offering it to TrustMark members for £49 plus VAT. So there's loads of value in there. Even if only part of it is relevant to you, there's loads of value in there. As I say, once you've got your license, you can interact with it as you see fit. So it's £49 plus VAT, and I think the guys Daniel and Reese will no doubt reissue a link through which you can sign up. But it'd be great to get people on there and using it. We're always open to any feedback from anyone about ways in which we could improve it as well.
Yeah, there are people using it for the past few months, haven't there, and finding it, very useful, and it's a great resource. So definitely look at the links which we'll provide in the chat and find out a bit more about it and ask any more questions. Okay, so I'd just like to thank you, Martin, for sharing that knowledge with us today. Hopefully people watching have found some useful tips and ideas, and some reassurance in certain areas as well, because I know it is quite a daunting world for a lot of people, as you said, who are they're not trained accountants. We're not, you're doing your job, you're a tradesperson, you're an installer, you're a professional in your area, but finance is something that not everybody feels comfortable with. So hopefully that's given some reassurance there. And as I said, look at the links, find out where we can provide extra support for you through this training package. And I'd just like to thank you all for attending. Hopefully you found it beneficial, and hopefully we'll see you again soon. Thank you very much. Goodbye.
Thanks, guys.